A sector when people are working very hard, when majority of them are kind of enjoying the lockdown. Well, I'm not talking about YouTubers. I'm talking about a sector which is considered to be the backbone of the economy. But do you know that this sector has corrected a lot in the recent past? There are few stocks which can be definitely looked at in these times. If you want to know more, check out the full video. Hi guys, Rachana Ranade here and I welcome you all to my new lecture wherein I'll be talking about top 2 stocks from the banking sector. If you have checked out my previous video, I had talked about top two companies in the FMCG sector. Please remember one thing, whenever I'm talking about top 2 stocks, my personal suggestion would be do your research, number 1, and number 2, even if you decide to invest, don't invest at one shot, please invest in bits and pieces. Now let's understand about the current economic scenario and what measures RBI has taken to cope up with the current coronavirus crisis. Now let's understand what RBI does. RBI, which is Reserve Bank of India, is like a central bank of India. Now they come up with various policies which impact the banking sector and which in turn impact the overall economic position of our country. Now currently what has happened, let us understand. Because of the coronavirus thing and because of the lockdown, overall economy has slowed down and there are chances that it might slow down further. So that the slowdown is not that bad, we need to boost up the economic sector right now. Let's understand this in a very simple words. To boost up the economy, what do you think? Will the business require more and more funds? Okay, to boost up they need more funds. They need more funds and very important that too at a lower rate of interest, correct? Now if the businessmen need loan at a lower rate of interest, banks should provide them at a lower rate of interest. But for that, it is necessary that banks themselves should be able to arrange money at a lower rate of interest. Now, who can give loans to banks? There has to be someone else on the top of the pyramid who gives the loans to banks as well. And who is that? That is RBI. Okay. So please understand the rate at which RBI gives money, gives loans to banks is known as the repo rate. Okay. So one more time, if repo rate is lowered, what will happen? Tell me. The cost at which banks get the funds will be lowered. If cost of funding of the bank itself is lowered, they will give the loans to the various businessmen at a lower rate of interest. And in turn, if businessmen have a lot of money in their hand, they will employ these funds in the business and try to grow their business at a higher pace. This will automatically enhance the liquidity in the market, and number 2, it will also give a basic economic boost. Right? What has happened? RBI has lowered the repo rate by 75 basis points to 4.4, which is as good as lowest ever repo rate in our country. One more small clarification, 75 basis points. Basis points seems to be a very big word for many people. 75 basis points is nothing but 0.75%. Okay, 100 basis points is equal to 1%. As simple as this, right? Second one, the CRR has been cut by 100 basis points to 3%. Now what is 100 basis point? 1%. Next question, what is CRR? CRR is the capital reserve ratio. That's nothing but how much funds bank have to keep with themselves as a reserve. Okay. Now the current CRR is 3%. What does that mean? If bank has 100 rupees with them, they can't give this entire 100 rupees as a loan to different people. They have to keep some money as a reserve with them. This is known as CRR. Okay. Technically speaking, they don't have to keep the money with themselves as such. They have to deposit this money with the RBI. Money which they have to keep with themselves is known as SLR. SLR is a statutory liquidity ratio. So let's understand this. A bank A has 100 rupees funds with them. And if current CRR is 3, what does that mean? Can bank give entire 100 rupees as a loan? No. 3 rupees will have to be kept with RBI because that is the rate of CRR, and 97 will be the funds which will be available for loan disbursement. Okay. So please understand, if CRR is lowered, what does this mean? Banks have higher disposable funds. They can give more and more loans. If more and more loans can be given, automatically there will be a boost in the economy. Third, and one more important point, is that the moratorium period for 3 months for various types of loans was declared by our RBI governor. You can check out this live stream which I had done a few days back, and I've explained this entire point of 3 months moratorium absolutely in detail. Have a look at that. You will get to know about what happened with this announcement of our RBI governor. There are 2 additional points. Number 1, that there were some long-term repo rate operations which were taken up by RBI, and in addition to this, there was a US INR swap which was taken by RBI. I know these are two heavy words, US INR swap, but to simplify things, US INR, US USD INR. Swap means what? One in exchange of the other. Okay, so what RBI did was RBI asked the banks and said that you exchange your dollars with us and we will give you money. Okay, so RBI purchased dollars, gave them money in return, and that too at a low rate of interest. 1 year rate of interest of a loan, 3 year rate of interest of the loan was kept the same. Okay, I've explained these 2 points of USD INR swap and long term repo rate operations in my community tab, which is available for all the members of my channel. If you are not aware about how to join memberships of my channel, just check out, there is a join button on my channel. You can click that and you can avail all the community posts every single week about the latest updates. Now let's go to the top 2 stocks. I'm sure you have been waiting for that only, but I hope you have understood what is the current economic scenario right now. If you have understood this, then understanding the stocks in detail gives a much better understanding, and the joy of learning is totally different, right? So let's move on to the very first bank that I'm going to talk about. It's a bank which has a very wide geographic reach. It has more than 24,000 branches and it has presence in more than 35 countries of the world. It's a bank which is the largest public sector bank in India, and it has presence in many remote places of India as well. I hope you have guessed which bank I'm talking about. A bank which, in spite of being in the public sector space, has comparatively better or even competitive mobile apps like the YONO app, and it's a company wherein majority of the government employees or the state government, maybe central government employees, have their accounts, their EPFs, PPFs, they have a huge deposit of that. I hope you have guessed the name till now. It's SBI. Now let's talk about the top 3 negative factors of SBI. The very first one is they are inefficient to use the capital. This is clearly evidenced by the fact that the return on capital employed is decreasing year on year. It is a typical feature of majority of the public sector banks when you whether talk about return on equity or return on capital employed. On an average, it is not as high as private sector banks. But yes, SBI is also not able to perform. The last 2 years especially, the ROC is definitely decreasing. The second negative is that it has a huge exposure to various sectors which are in trouble, especially sectors like telecom, sectors like airline. They have a huge exposure to that. So more and more companies in these sectors go down, it's going to invite a problem for SBI, which is going to be NPAs. Third, and one more negative about SBI is that they have again a pretty big exposure in almost majority of the cases, whether it be a fraud case or whether it be an NPA case. Like if you talk about Kingfisher Airlines, which was a comparatively old example. Now, these days, in India, you talk about fraud cases and NPA cases, there's a competition. Like Kingfisher is such an old, now PNB ke baad other, uske baad other. So you will find a lot of cases which are coming back, and unfortunately, majority of these cases, whether it be NPA or fraud, SBI has a big exposure to that. Now let's talk about one interesting fact about SBI. One bank which was looked up by everyone, like treated to be one of the best banks, treated to be a bank which can give a very tough fight to private sector banks like ICICI, HDFC, which was Yes Bank. And you know what has happened to that bank right now. Its share price crashed from 400 plus levels to less than 40 levels now, corrected by more than 90%. And in this bank, in Yes Bank, SBI has made an investment of approximately 7,250 crores. Okay, so SBI is like treated to be the savior of all the banks. Whenever there is any problem, whenever there is any goof up, SBI says, don't worry, main hu na, and they will give funds to these banks. So a big investment in Yes Bank. Number 2, which is not directly for SBI, but SBI is like a major shareholder in a company which had just debuted on the bourses BSE and NSE, which was SBI Cards. SBI Cards IPO, which was expected to be a big success, but unfortunately, because of the current economic scenario, it got listed at a price below its issue price, and currently it's trading almost at 20% to its discount, 20% discount to its issue price. So of course, it will have a little bit impact on the financials of SBI as well. Now, before we talk about the financials of SBI, let's move on to the second stock of the day, which is Hdfc Bank. It's one of the largest private sector bank and it has a very strong network across India. It is also associated with a group. It is basically associated with a group which has so many companies and which are so very popular among the investors. May it be HDFC, the holding company, or HDFC AMC, HDFC Bank itself. Even if I talk about HDFC mutual funds, they do take a very strong brand value with themselves. So I believe strong brand value is a very big advantage for HDFC Bank. The third one being that it is a private sector bank which is comparatively less involved in controversies, and maybe that is the reason why the FIIs or the FPIs are increasing their stakes in this bank. Let's understand the top 3 negative points for HDFC. I talked about FIIs increasing their share in this bank, but yes, simultaneously mutual funds are decreasing their shareholding in HDFC Bank. So FIIs are increasing the share, mutual funds are decreasing the share. So all in all, it's not that a big negative, but I have to consider that as a little bit negative though. Second one is that there's an increase in the provisions and contingencies of 27.3% year on year. Please understand that if I'm talking about a bank, if provisions and contingencies are increasing by this percentage, it's again not to be considered to be very worrisome, because if you understand the bank's business model in true sense, for a bank's contingent liabilities generally are on a higher side. If you're not aware about this, how contingent liabilities impact the banking business, or how contingent liabilities are an inherent characteristic of a banking business, if you don't know about this, please let me know in the comment section that contingent liabilities and banking business, please explain, and I will be happy to explain that. And number 3, I'll be talking about in the next part of this video. Now, you may consider this as the third negative because their existing managing director, Mr. Aditya Puri, he is on the verge of retiring from the bank. He has been serving the bank since 1994, and if a proper replacement is not found, then there may be a possibility that the bank's, I'm not saying that it'll be all over as such, but yes, somewhere or the other, the growth at which the bank is growing, or the strong brand value that it is carrying right now, the strategies with which it is going ahead, the rate at which it is growing right now might be lowered down a little bit, but that completely depends on who the successor is. One more interesting fact about HDFC is that it's again Yes Bank. They have also invested in Yes Bank to the tune of 1,000 crores. So Yes Bank has been pretty fortunate enough to get loans, or I need not say loans actually, it's more of investment from big banks like SBI and HDFC. Now let's talk about the financials of SBI and HDFC. For SBI first, the return on equity over the last period of 5 years has been 4.32% on an average, but for the past 1 year it's just 0.44%. That was one of the negatives that I was talking about. ROCE as well as ROE is decreasing quite a bit. But it's not only about SBI, almost all public sector banks are not doing good as on this date, but in Marathi we say Vasrat Langdi Gai Shahani. So amongst all public sector banks, SBI is doing the best. The net NPA, a net performing asset, has gone down from an average of 5.68% to 3.01%. That's a good sign. Net interest margin. So basically, net interest margin is not exactly what I'm telling you. What I'm telling you is more of spread, but you can derive NIM from that. Basically, how much interest SBI earns versus how much SBI spends. The difference between that is spread, and from the spread we can calculate NIM. If you want to know more about NIM, please again let me know in the comment section. I would be happy to tell you about these 2-3 top points. I'll be happy to explain this because you need to know them if you're talking about analysis of banks. Okay, so net interest margin, just as of now, just remember this thumb rule: higher the better. 5 years average was 2.57 and last 1 year it has been 2.62%. As far as HDFC is concerned, the return on equity is 12.18% last year, and on an average it was 12.61%. Guys, just check this. Last one ROE is 12.18 versus SBI was 0.44. That's the difference between a top private sector bank versus a top public sector bank. NPA is only 0.75% for HDFC, fantastic, and net interest margin is also 3.73%. The last 5 years compared to the last 5 years average, it's a little bit low, but still is doing very good. EPS, SBI is 13.16, which is the best in public sector. But if I'm talking about HDFC, it is 46, which is best in the private sector. Moving ahead with few more contents about financials, whenever you're trying to value or analyze a bank, very important ratio is P to BV, that is price to book value. For SBI it is only 0.77. So this is a share whose price has corrected a lot. P to BV less than 1 is too much, and there is a possibility that you can start entering into this bank in bits and pieces. Right now P to BV is very much in favor of SBI. Of course, there are reasons why the stock price corrected so much. Number one is the overall economic scenario, and number two, you are seeing that their ROE, ROCE has fallen down in the past few years. For HDFC, P to BV is 2.95, so a little bit expensive. Revenue growth for SBI has been 5.22% CAGR. CAGR is a compounded annual growth rate, but for HDFC Bank, revenue growth has been 20% CAGR. As far as any bank is concerned, revenue is nothing but their basic interest earnings. So that's about the revenue growth. One last parameter, PE, which is the price earning ratio. For SBI, it's 11.81 versus an industry PE of 25.52, whereas for HDFC, it's 17.31 versus an industry PE of 25.52. I hope you have enjoyed this content of top 2 stocks in the banking sector. I'm sure there are going to be people who are going to write down in the comment section that forget about the entire video, SBI and HDFC. That's what you have to focus on. And this comment will receive the highest number of likes and highest number of comments. Don't be into this category. Be into the category of being good researchers, people who will do more and more of reading, and if you want to gain more and more knowledge, you have a lot of options. Option number 1, subscribe to my channel and hit the bell icon so that you can get a notification of all the videos I post. Possibility number 2, you can also check out my memberships, in which you will get exclusive videos wherein you will have an opportunity to enhance your knowledge further. Possibility number 3 can be check out my live streams every day 6 in the morning and 7 in the evening, wherein we discuss a lot about stock markets as well. Well, this was the 3rd video that I shot from my house, and I have been troubling each and every family member of mine. किसी को नहीं छोड़ा है अभी तक. First was shot by my son Meg, second was shot by my mother-in-law, and the 3rd one is being shot by the person who has been responsible for developing interest in stock markets. As far as my knowledge is concerned, he was the one who intrigued me to learn more and more about stock markets. Thank you for shooting this video. Well, he didn't have any choice though, but he has been kind enough to shoot this video. So that's it from our side for the day. Jai Hind and bye-bye.